Hello students, welcome to my channel Hans Commerce Tutorial for the lectures on commerce, accounts, finance and management. My suggestion to you, before watching the video, please go to the description below my video. You'll find a link there. Take a printout of the problems given in the link and keep it ready before watching the video so that you can be able to understand the problem, the solution and the explanation to get the maximum benefit from the lectures. Thank you. Come on, now we'll start problem number 6. See carefully problem number 6. The following information was extracted from the books of a limited company on 31st March, on which date a binding of order was made. Equity share capital 2 lakh shares of rupees 10 each, 20 lakhs. 15% preference share capital 3 lakh shares of rupees 10 each, 30 lakh. Then calls in arrear 40,000 estimated to produce 20,000. So out of 40,000 calls in arrear, 20,000 are recoverable. So 20,000 will be taken under list A, assets which are not specifically pledged. Then 15% mortgage debentures secured by floating charge on the whole of the assets of the company, 20 lakh, list D. Then creditors fully secured 3,50,000, value of security 4 lakh. So 4 lakh rupees of the security provided and the amount due is 3,50,000, fully secured. 50,000 rupees surplus will get. Creditors partly secured, 4 lakh rupees are the creditors and the security provided is only rupees 2 lakh. So what we should do, 2 lakh rupees is the security value whereas amount due is 4 lakh. So remaining 2 lakh rupees which we have not paid, that will come under unsecured creditors list E. 4 लाख रुपए के क्रेडिटर्स है लेकिन सिक्योरिटी वो लोग को प्रोवाइड करे 2 लाख, तो वो 2 लाख रुपीस वो लोग निकाल लेंगे. बाकी के 2 लाख रुपीस जो और देने का है, that 2 lakh rupees we have to take under list E, unsecured creditors. Preferential creditors for wages, list C. Unsecured creditors, list E. Bank overdraft secured by second charge on the whole of the assets, 2 lakh. So we have list D 2 items. First charge is first mortgage debentures floating charge 20 lakh, or second charge was 2 lakh rupees. So both this first charge and second charge both will come under list D. That means creditors having a floating charge on the assets of the company. Then cash in hand 12,000, list A. Then book debts 3,80,000 good. Doubtful are 80,000 estimated to produce 30,000. So out of 80,000 doubtful debts, 30,000 are recoverable. So good 3,80,000 and doubtful but recoverable is 30,000. So 3,80,000 plus 30,000, 4,10,000 is the debtors. Bad debts 45,000 we should not consider. Stock in trade estimated to produce 6 lakh, directly will take. Land and building estimated to produce 18,50,000, directly we take. Plant and machinery 6,30,000, furniture and fitting 80,000. All these are the assets not specifically pledged. You are required to prepare a statement of affairs of the company. That's it. Now already we have done 5 problems. In those 5 problems already you are acquainted about how to prepare the statement of affairs. Same thing we are following. Next 1 or 2 problems, then we'll stop this statement of affairs. Then we have to start liquidator's final statement of account. Now, Dash Company Limited statement of affairs as well. Assets not specifically pledged as per list A. Calls in arrear 20,000. Actually 40,000 calls in arrear are there, but 20,000 are recoverable. Then cash in hand, book debts 3,80,000 good and 30,000 doubtful but realizable, 4,10,000. Stock 6 lakh, land and building 18,50,000, plant and machinery 6,30,000, furniture 80,000. The total of the assets, realizable value of assets are 36,02,000. Now assets specifically pledged as per list B. So we have assets, estimated realizable value, amount due to creditors, surplus or deficiency. Assets fully secured. We have provided the security, fully secured creditors. So realizable value of fully secured creditors 4 lakh and amount due to creditors are 3,50,000. It is given in the problem. So remaining 50,000 rupees surplus will get. Second, partly secured creditor. The value of the security is only 2 lakh, but the amount due to creditors are 4 lakh. So there is a deficiency of 2 lakh. This deficiency of 2 lakh will come under list E, unsecured creditors. तो 4 लाख रुपये देना था, उसमें से 2 लाख रुपये सिक्योरिटी के मिल गए वो लोग को, बाकी के 2 लाख रुपये जो देने का है वो अनसिक्योर्ड में लेंगे. Now surplus from fully secured creditors 50,000. This is the surplus 50,000. Now total assets available 36 lakh 52,000. These are the estimated total assets available for making the payment to preferential creditors, debenture holders and unsecured creditors. Now gross summary of gross assets. Gross realizable value of assets specifically pledged. These are the assets specifically pledged. The gross value are 4 lakh plus 2 lakh. Estimated realizable value of the securities provided are 4 lakh plus 2 lakh 6 lakh. Other assets realizable value 36 lakh 2,000. So total gross assets are 42 lakh 2,000. This is for our verification purpose. Now liabilities to be deducted from surplus or added to deficiency. Gross liability estimated to lakh. First we will take fully secured creditors. The fully secured creditors are 3 lakh 50,000. This fully secured creditors will be taken only in the column of gross liabilities. That amount will not be taken in estimated to rank because they will recover their amount. No need to pay anything. Now, next preferential creditors 75,000 directly given in the problem. Deduct 75,000 from 3652, we will get 35 lakh 77,000. This is the amount available for paying to debenture holders and unsecured creditors. Estimated balance available for debenture holders and unsecured creditors. Now, debenture holders having a floating charge on the assets as per list study 20 lakh. First mortgage debentures having a floating charge on all the assets 20 lakh. 20 lakh estimated gross liability and 20 lakh estimated to rank. Similarly, bank overdraft secured by a second charge on the assets as per list D. So, one more creditors are there. Bank overdraft having a floating charge. So, 2 lakh. This 2 lakh rupees will be taken. This 2 lakh. So total is 20 lakh plus 2 lakh, 22 lakh will be deducted. So 35 lakh 77,000 minus 22 lakh will get 13 lakh 77,000. Now this amount is available for making the payment to unsecured creditors. So unsecured creditors are given in the problem 27 lakh. So both the columns we have taken 27. Now partly secured creditors estimated to rank is 2 lakh. Deficiency कितनी है वो लोग की 2 lakh. But the gross liability for partly secured creditor is 4 lakh. The gross liability is 4 lakh, but estimated to rank only 2 lakh. तो 2 lakh रुपीस यहाँ पर लेंगे जो पेमेंट करना है, जबकि ग्रॉस लायबिलिटी वो लोग की कितनी थी 4 lakh रुपीस. तो टोटल ऑफ ग्रॉस लायबिलिटी विल बी 57 lakh 25,000. Now 29 lakh 27 plus 2 29. तो 29 lakh will Subtract 29 lakh from 13 lakh 77,000. You get deficiency of 15 lakh 23,000. So this is the estimated deficiency as regards creditors. Estimated deficiency as regards creditors. This being the difference between the gross assets and gross liability. We can check. So 15 lakh 23,000 is the estimated deficiency. Gross assets are 42 lakh 2,000 and gross liability is 57 lakh 25,000. So subtract 42 lakh 2,000 minus 57 lakh 25,000, you get minus 15 lakh 23,000. Confirm, our calculations are correct. So up to deficiency as per creditors we have taken. Now share capital. Share capital issued and paid of 15%, 3 lakh preference shares of rupees 10 each, 30 lakh. 30 lakh rupees are due to preference shareholders. Equity share capital 2 lakh, equity shares of 10 each, 20 lakh, less calls in arrear 20,000. So out of 40,000 calls in arrear, 20,000 calls in arrear are recovered. We have taken here. The remaining 20,000 rupees are not recovered. So 20,000 will be deducted. So 20 lakh minus 20,000. So 30 lakh plus 20 lakh minus 20,000, you will get 49 lakh 80,000. 49 lakh 80,000 is the total amount due to shareholders, both preference as well as equity. Now, already there is a deficiency of 15 lakh 23,000. So 15 lakh minus 15 lakh 23,000 minus 49 lakh 80,000. You will get minus 65 lakh 3,000. So 65 lakh 3,000 is the total deficiency as regards contributories. As regards contributories as per list H. That's it. This is the end of problem number 6. Now see the 7th problem. Problem number 7. The following particulars were extracted from the books of X Limited. The following particulars were extracted from the books of X Limited on 1st April 2010, on which date a binding of order was made. Equity share capital 20,000 shares of 10 each, 5 rupees paid up 1 lakh. 14% preference share capital 20,000 shares of 10 each, fully paid up 2 lakh. So we have equity capital as well as preference capital. 14% first mortgage debentures secured by a floating charge upon the whole of the assets of the company. This will come under list D. Then fully secured creditors 30,000, value of security 35,000. So 30,000 rupees is the due to creditors and 35,000 is the value of the security given. So we are going to get 5,000 rupees surplus from fully secured creditor. Partly secured creditors are 20,000, value of security 10,000, just like the previous problem. Amount due to creditors are 20,000, but the security provided is only 10,000. So remaining 10,000 rupees will put under list E, unsecured creditors. Preferential creditors for rates, taxes, wages, list C. Bills payable, list E, unsecured. Unsecured creditors, list E. Bank overdraft, nothing is given, so we take under list E, unsecured. Bills receivable in hand, list A, that is asset not specifically pledged. Bills discounted 40,000, one bill for 10,000 known to be bad. Already this company has discounted bills from the bank, 40,000. But out of 40,000, one bill 10,000 rupees is expected to become bad. So this 10,000 rupees is going to be a liability. Unsecured creditor, liability on bills discounted 10,000. Book debts, good 10,000. Debtors 10,000. Then doubtful are 7,000, estimated to produce 50%. 7,000 rupees of debts are doubtful, but out of 7,000, 50% are recoverable. 3,500 are recoverable. So we take good debts 10,000, doubtful debts 3,500, which is going to be received. So 10,000 plus 3,500, 13,500 will take for debtors. Bad debts, ignore. Then land and building estimated to produce 1 lakh. Then stock in trade 40,000, machinery and tool 2,000, cash in hand 100. Prepare a statement of affairs as regards creditors and contributories. That's it. X Limited statement of affairs. Assets not specifically pledged as per list A. Cash in hand 100, machinery 2,000, stock 40,000, land and building 1 lakh. Book debts 10,000 good and 3,500 are doubtful but expected to receive. 13,500 bills receivable. So total of list A 1,70,600. Now we'll come to list B. Assets which are specifically pledged as per list B. So we have to show the detailed assets and realizable value of those assets, amount due to creditors, we are getting surplus or deficiency. So we have two types of creditors, fully secured and partly secured. First, fully secured creditors are 35,000 realizable value of asset, amount due to creditor is 30,000. So 5,000 rupees surplus we are going to get. Partly secured creditor is 10,000 is the value of security, but the amount due to creditor are 20,000. So remaining 10,000 rupees, here it should be 10,000, not 20,000. Deficiency is 10,000. This 10,000 rupees deficiency will be added to unsecured creditors. With this 10,000 deficiency will be taken in unsecured creditors, list E. Now estimated surplus from fully secured creditors, we are getting 5,000 rupees surplus. This surplus we have taken here. Now the total assets available 1,70,600 plus 5,000, 1,75,600. So total assets available for making the payment to preferential creditors, debenture holders and unsecured creditor 1,75,600. Gross summary of assets, gross realizable value of assets specifically pledged as per list B. In list B we have given securities. What is the realizable value of security? 35,000 and 10,000. Total milakar 45,000. So 45,000 rupees is the realizable value of assets specifically pledged. Other assets realizable value 1,70,600. So total gross assets 2,15,600. Now liabilities. The gross liability we are showing separately. Then liabilities to be subtracted from, deducted from surplus or added to deficiency and estimated to rank. First, creditors secured as per list B. ये creditors secured, fully secured. How much are the creditors fully secured as per list B? That is 30,000. Creditors 30,000 के है जो fully secured है. अब ये लोगों को कुछ पेमेंट करना नहीं है, nothing. So put a dash in estimated rank, and that 30,000 will be taken under gross liability. Preferential creditors list C given in the problem 6,000. Subtract 6,000, 1,75,600 minus 6,000, 169,600. This is the estimated balance available for paying to debenture holders and unsecured creditors. Now debenture holders having a floating charge on assets as per list D, 1,50,000. Both the columns, gross liability estimated to rank. Subtract it, we'll get 19,600. This 19,600 is the only amount available for paying to unsecured creditors. So unsecured creditors as per list E. Bills payable 1 lakh rupees, both the columns, gross liability and estimated to rank. Similarly, unsecured creditors 70,000, 70,000. Bank overdraft 10,000, 10,000. Liability on bills discounted 10,000, 10,000. Partly secured creditor. I already told you here, partly secured creditor, value of security is 10,000, but the amount due was 20,000. How much was the deficiency? 10,000. This deficiency is now payable along with other unsecured creditors. So 10,000 rupees. But what is the gross liability for them? 20,000. The gross liability for partly paid security is 20,000. So take 20,000 here. Now take the total of the gross liability, you will get 3,96,000. Now deduct this 2 lakh. So 19,600 minus 2 lakh. This is minus 2 lakh. So you are going to get 1,80,400 deficiency. The company is not in a position to pay fully to unsecured creditor. Pay karna hai unsecured creditor ko 2 lakh rupees, but the company is having only 19,600. So there is a deficiency as regards creditors 1,80,400, being the difference between gross assets and gross liability. Find out the difference. 2,15,600 minus 3,96,000. You will get minus 1,80,400. Now share capital. Paid up share capital. Preference share capital 14%, 20,000 preference share of 10 each 2 lakh. Equity share capital 20,000 equity share of 10 each fully paid 1 lakh. So total amount due to shareholders is 3 lakh. 3 lakh rupees are due. So 1 lakh minus 1,80,400 minus 3 lakh. So total 4,80,400 is the total estimated deficiency as regards contributories as per list H. So this is the end of problem number 7. Now see the last 8th problem. This will be the last and final problem on statement of affairs. The next problem onwards will start the problems on liquidator's final statement of account. Now see the 8th problem carefully. On January 31st, 2003, a compulsory order for winding up was made against X Company Limited, the following particulars being disclosed. Book values are given, estimated to produce is given. Cash in hand. This is the asset not specifically pledged, list A. Debtors, same, list A. Estimated to produce 3,600, this we should take. Land and building, furniture and fixture, unsecured creditors, list E. Then creditors secured on land and building. That means land and building was pledged for creditors. So 42,000 rupees we have to pay to the creditor. But what is the realizable value of land and building? 48,000. 48,000 is the realizable value of land and building, and the creditors are 42,000. So there is a surplus of 6,000. Debentures secured by floating charge, list D. Then preferential creditors, list C. Share capital, last one will take. Estimated liability for bills discounted was 6,000. Estimated to rank 6,000. That means there was a bill discounted with the bank and estimated to produce. That means we have to pay 6,000 rupees to the banker because the bill is going to become bad. So this will be taken under list E, unsecured creditor. Other contingent liability were 12,000, estimated to rank 12,000. Apart from the bills discounted, one more contingent liability was there, and now it is going to become the actual liability. So this 12,000 rupees will also be taken under list E, because contingent liability has become actual liability. The company formed on 1st January 1998 and has made losses of 3,13,900. Actually, 1st January 1998 the company was formed, and the company was dissolved on January 31st 2003. So after 5 years. So first year the company has made losses of 3,13,900. Prepare the statement of affairs and the deficiency account. In this problem we are required to make the statement of affairs, and also we have to make the deficiency account, showing the reason for the deficiency which we are getting. First of all, statement of affairs as at 31st Jan. Assets not specifically pledged as per list A: cash in hand 100, debtors 3,600, furniture 20,000. The total assets are 23,700. These are the assets not specifically pledged. Now assets specifically pledged as per list B. Asset estimated realizable value due to creditors, surplus or deficiency. Land and building. Land and building is given as security to the creditors. The realizable value 48,000, due to creditors 42,000. So 6,000 rupees surplus we are going to get from fully secured creditor. The estimated surplus from fully secured creditor 6,000. Subtract add up 6,000, 23,700 plus 6,000, 29,700 is the total assets available for making the payment to preferential creditors, debenture holders and unsecured creditors. Total assets available. Now summary of gross assets. Gross realizable value of assets specifically pledged 48,000. So 48,000 we got it here, and other assets 23,700. So total gross assets are 71,700. This we need only for verification purpose. Then gross liabilities. Secured creditors as per list B. The secured creditors as per list B 42,000. So take it only in the gross liability column. Don't take it in the estimated to rank, because there is no need to pay. Already it is paid. Preferential creditors as per list C given in the problem 6,000. Both the columns. Gross liability column and estimated to rank column. So subtract 6,000, 29,700 minus 6,000, 23,700. This is the balance available for making the payment to debenture holders and unsecured creditor. Next, debenture holders secured by floating charge as per list D. Given in the problem 10,000, 10,000. So minus kar do, 23,700 minus 10,000, 13,700. Now unsecured creditors are 20,000. Liability on bills discounted estimated to rank 6,000, and other contingent liability now becoming payable is 12,000. So total under unsecured creditors as per list E is 38,000. Take 38,000 in both the columns, gross liability and estimated to rank. Subtract 13,700 minus 38,000, you are going to get 24,300. 24,300 is the deficiency minus. You are subtracting 38,000. So 13,700 minus 38,000, you are getting minus 24,700. So deficiency as regards creditors, being the difference between gross assets and gross liability. We can confirm whether our answer is right or not. Take the difference between gross assets and gross liability. The gross assets are 71,700 and the gross liability is 96,000. So 71,700 minus 96,000, you will get 24,300. Confirmed. Now issued and paid up capital, preferential capital is not there. Equity share capital 3,200 shares of rupees 100 each. So it comes to 3,20,000. So 3,20,000 rupees is the amount due to equity shareholders. So equity shareholders minus 2. Minus 24,300 minus 3,20,000. 3,44,300 is the estimated deficiency as regards contributories as per list H. Now in this problem it is asking you to make a deficiency account explaining the reason why we got, how we got this 3,44,300 deficiency. Total deficiency 3,44,300. How we got it? On what account we are getting the deficiency? For that purpose we have to make deficiency. Specifically it is asking, that's why we are making deficiency account. Already in earlier problems we have solved the problem on deficiency account. All losses should be taken on debit side and incomes which reduces deficiency should be taken on the credit side. The balancing figure you should get the same amount of deficiency as disclosed by statement of affairs. Now first of all, It is given in the problem, the net trading losses in the beginning was 3,13,900. The losses given in the problem, trading losses 3,13,000. Losses now written off. At the time of winding up, of the company, some losses were incurred. That losses will take now. The first loss is bad debts. You can see the problem. Bad debts are given 400 rupees. That's the loss. Land and building. Take the difference between the book value and the realizable value. The difference between the book value and the realizable value. The realizable value has decreased. See here, in the problem it is given land and building value is 60,000 book value. But realizable value is only 48,000. So in the balance sheet, the land and building was showing at 60,000. Whereas when we sell the land and building, we are getting 48,000. So there is a loss of 12,000 rupees. So land and building 12,000. Liability on bills discounted. Actually, we have discounted some bills with the banker, and the banker has informed us that some bills have become bad, dishonored. So we have to pay. Company has to pay the bills which are dishonored. So 6,000 rupees is the liability on bills discounted. Similarly, there was one contingent liability and it has become an actual liability. That is also a loss. So 12,000 rupees is the contingent liability, now become payable 12,000. These are all the losses. Now credit side, by items reducing deficiency. What are the items that will reduce deficiency? If there is income. If there is income, that would have been taken on the credit side. But we don't have any income which reduces the deficiency. Then deficiency. Now we take the balancing figure. Take the total of the debit side, 3,44,300. We don't have anything on the credit side. So balancing figure is 3,44,300. That is the deficiency as per statement of affairs. Balancing figure. Here we got 3,44,300. So how we got this 3,44,300? We have to show it in deficiency account. So these are the problems on statement of affairs. Now next video we are going to start the problems on liquidator's final statement of account. Hope you understood my lecture, you understood my concepts and explanation of the solution. So I expect that you will share this video, you will share the link of this video and promote my channel by subscribing, by liking my channel, give the comments how you feel about after attending these lectures. See you then again in the next video.